it was an unbelievable rally. November, December, stocks were up mid-teens.
Yep.
That's like a year and a half's work in 2 months over the long term. And that's a big number. Of course, it all came because the Fed said, not explicitly, we're going to pivot. We're done raising rates, and it's happy land again. And bonds took off, and stocks took off, and credit spreads narrowed. We came into the year, we had a little bit of a hangover. I'm not convinced we aren't going to get some more of that. The average stock having done well with those small stocks catching up in November, December has lagged or down year to date, while the broad averages, you guys point out, are up a bit. So I'm a little concerned, and my biggest concern is earnings, which we can talk about if you like.
Absolutely. That's where I wanted to go, Bob. I kind of felt like just looking at that performance at the end of last year, it was, as you mentioned, on that Fed pivot. So I'm wondering now what's the driver? And I kind of feel like as a former equity analyst who still thinks earnings matter, I think earnings need to really come through here. I'm not sure we're going to get it here. How do you think about the earnings risk here in this market?
I think the risk exists, especially with PE ratios over 20. If the PE were 15 or 16, maybe we could relax on earnings, but not true. Fourth quarter earnings, they're coming through fast and furious. On October 1st, when that quarter started, analysts expected earnings to be up for the quarter 7%. That number is now +1. From +7 to +1, that's a much bigger decline than usual. Of course, they set up so there are beats, and the beats, last I saw, are running in the low 60%, which is the lowest we've seen in quite some time. And analysts have not done a whole lot yet to their 2024 numbers, as the fourth quarter is disappointing them a bit. They're waiting for the conference calls to figure out how much to take 2024 down. Those numbers will come down some more, in my view.
Bloomberg Surveillance, retirement planning. We're never retiring, so we'll talk about it for you. Bob Dahl, let's talk about retirement planning. Rebalancing is all out there. If I had to rebal, whatever the timeline is, quarterly, semi-annual, yearly, every 5 years, whatever, I would have sold Microsoft 6 years ago, or at least lightened up. You need to explain to me the marketing racket of target date funds. You fought against that your entire career. What's the problem with over-rebalancing?
So the first problem with those target date funds is I think they're too conservative. If we retired at 65 and died at 66, different story. But life expectancy continues to get longer, so the mixes are, in my view, too conservative. And then when you rebalance, you're constantly rebalance out of things that are working into things that are not. There's some merit to that on a long-term basis, but if you're already starting too conservative, you can really rip into your retirement savings.
Paul Sweeney, you nailed this with your first question of the morning, saying, what about holding your winners in that? The guy that lectured me on this was a gentleman from St. Louis. I've never forgiven him for not buying the Cardinals from the Bush family. Benjamin S. Edwards III of A.G. Edwards. Ben Edwards would scream at me, do not sell your winners. Bob Dahl, 101.
Hey, Bob, 2024, whether we like it or not, is an election year. You've been through so many cycles, Bob. Does this factor into your outlook? What do you tell your clients here in what could be a volatile, electoral cycle here?
Yeah, I think have patience. Don't look for stocks where you think the valuation's going to go up, the earnings, the cash flow. Just be very cautious in terms of the kinds of things you're buying. That's advice all the time, but in periods of uncertainty, in periods when the PE is over 20, you've got to pay attention to that. The election is going to create some uncertainty. Of course, the nominees are just about wrapped up, about the earliest ever, so this general election campaign is going to seem like years.
So, yeah, exactly. Just what we all need. Maybe the TV stations with all the advertising dollars, maybe they'll benefit here. So, Bob, I'm also wondering, as I talk to a lot of investors, did the move we saw in the markets again in November, December, was that kind of buy the rumor and now sell the news? Because what can the Fed do? The expectations are already kind of in the market, it seems like.
Their expectations and then some are in the market. Right. As you know, we got at one point the expectation that Fed fund futures were saying 7 cuts by the Fed this year. That's backed off to 6. I think it's going to be more like 3 or 4. I think inflation, remain sticky, especially wage rate inflation, and it's going to be tough for the Fed to do as much as the futures curve is suggesting. So yes, we bought the rumor. I think there'll be some disappointing news to come if we can't get 6 cuts.